Hey there, it's Ryan Skaggs. This is your Mortgage Minute. It is October 17th. If you haven't subscribed, get down there and do it first. Pop that like button as well. Let's jump into your update. Freddie Mac has given us the 10th all-time low this year on the 30-year fix, 2.81%. Our previous low, we've been at 287, 288, 293. I mean, we've been hovering around this 2.8 range, so 281. And check out the link below while you're down there pressing that like button and pressing that subscribe button. But 2.81 according to Freddie Mac. So we've seen interest rates come down as was a bad week in the equity market. When we look at what's going to happen over these next few weeks, the election, I want to kind of give you just a quick update in terms of which direction we see the election go, what might happen. So first of all, typically, once we have an incumbent that stays in the presidency, the market goes up about 6.5% on average for our gains, right? So about 6.5% for the incumbent, about 5% when we have somebody new. Typically, it's just a matter of new policies, a little uncertainty, so you just don't get as much return, right? So when we have a split Congress, that typically is good for the market. That means there's going to be no drastic policies that are going to get pushed through from one side or the other. So a split Congress is actually a good thing for the market in terms of longevity and returns. Now, the Biden campaign has said they want to give $15,000 as a first-time homebuyer credit. But guess what? Here's the catch. They did that in February, and they've barely talked about it since. It was on their website up into August. So much has changed since February. But what they wanted to do is much like 2008 to 2010, Bush put in $7,500 for a first-time homebuyer credit. It was extended by Obama up to $8,000 going into 2010. So check out the links below. You can kind of get some more information on that. But Biden has mentioned a $15,000 credit, which is huge to get first-time homebuyers into purchases, which in this hot market, there's a lot of first-time homebuyers, and we do see the median sale price going up. So this could be a nice little kick in the pants to be able to get people in there that might not have the down payment. But here's the issue. We've gone so far into debt with coronavirus and things like that, and the economy shutting down and whatever else. I don't see how they're going to be able to pull this money out when they've got relief bill after relief bill that need to be going through first. So do I see a reality in the first 2 years of a Biden administration for this policy to be put in place? Not likely. So it's going to be far off if that is the direction that we go. On the Trump side of things, if we see him continue to stay in power, there is that there's no real housing platform necessarily. It's more focused on the equity markets and monetary policy and, basically kind of free market economics in terms of he wants to keep his hands off and keep that market going up. If the market continues to go up, we'll see rates rise with it, right? So in either case, we'll likely see rates start to rise from the mid twos, high twos, in terms of a 30-year fix into the low threes next year. So in either direction, the rate prediction is a slow bleed upwards into that low three. So thank you so much for tuning in. It's October 17th, your Mortgage Minute. If you haven't clicked that like button, please do so. Let YouTube know that you like the content and click that subscribe. You'll get the videos every single week that I put them out. So thank you so much for tuning in. Be safe, be healthy, and we'll see each other again very, very soon.